Hey guys, today I'll be doing a weekly market review covering Monday through Thursday. Today's Friday and we have a observation of a holiday. So yeah, let's get straight into it. Looking at what kind of red folder news we had this week. We had Wednesday and Thursday, so these were going to be the days that we focus on. Monday, Tuesday, we just have some orange folder, nothing too important. But the market's been different lately. There's been a lot of opportunity regardless of red folder or not. If you're in the right spot at the right time, then you could definitely catch a trade. So what's most important though is this Fed Chair Powell. Big topic right now. We're talking about interest rates, if we're going to lower rates, if we're going to keep them stagnant. And from my understanding, Fed Chair Powell made some statements about the stock market and just didn't go bullish. And I'll cover what that looked like, what opportunity there was there. And then Thursday, unemployment claims, nothing too crazy. Market hasn't been reacting to some of these red folder news just because tariffs and interest rates are the main topic right now. Okay, so let's look at Monday. So Sunday, new week opening gap. We had this large gap on the 4-hour right here. You could see it. We gapped up all the way up to here, traded lower. Then we started respecting it. So my initial bias for this day was bullish, just because I saw us create this gap. The previous week was sort of a retracement, so I thought we might see some bullishness at the start of the week, and that later became untrue. But regardless, we could read, we could react, and we could just interpret what happened. So right here, I wanted this target first, which was that opening high from Sunday. Sure enough, we came up there. We missed this Wednesday high right here, and we ended up trading lower. So let's see what happened. So we had a lot of built up sell side, and as soon as we opened up right here, right around 9:30, we took out that high, and sure enough, we sold off. After that, once we took care of these lows right here, it became really choppy. There was not a lot of opportunity. If you look at the 11 o'clock time, this macro right here, 10:50 to 11:10, there was pretty decent opportunity. You could see we came out, we swept out some of these highs, and then we're just respecting this BPR up here. So interpreting that, this would be a protected high, protected because we took out this buy side right here. So price doesn't need to come back up there, and we're respecting that 5-minute. So if we hop on the lower time frame, we're gonna have some opportunity in here. This is the 2-minute time frame. See, we have this fair value gap, also aligns with this small breaker / order block area, kind of a unicorn. Doesn't quite trade all the way up, but just the fact that that structure is there is a really good sign. If you didn't get in right there, there's more opportunity in here. I'd say this is still like a good area to enter just because we have quite a bit more sell side. Looking at these lows from Sunday, I'd say the point that I would not take any more trades within this leg would be this low, because we took out our main target, which would be these lows down here. So once it trades down there, it's like, oh, we're kind of in discount. We took out our main target. So there was the opportunity. And let's go on to the next day. Let me just get out of this. So Tuesday, we're still sitting and kind of accumulating inside of this new week opening gap. So morning, around 8:30 right here, we take out London Asia low, and then we just have like this really clear low resistance liquidity run. We have more highs in here. And again, something you're going to notice, especially as of recently, you're not going to see long bullish runs. They're always going to be short. It's going to hit its target, and then we're going to retrace. We're going to take a lot of that back. I just think this is a bear market, so it's something we have to adjust to. In terms of opportunity, if you're trading 10 a.m. silver bullet, there wasn't much that I liked from here. Obviously, there's some plays in here if you're trading prior to that silver bullet. Like you have these. So when you have two fair value gaps stuck together like this, preferably when you're trading IFVG, you only have one fair value gap that you have to invert. It's okay if you have two. You just want to wait till those two get taken out. So probably enter right here, target some of this internal liquidity. And yeah, that's about it. Personally, the trade that I took was in here. As you know, I usually trade later into right around silver bullet, so I'm not trading around 8:30. I took this small fair value gap. I believe it looks even better on the 2-minute. Yeah. So I took this 2-minute fair value gap right here. Stop below the candle, and then I took profit right around in here. But as you can see, like really not the best opportunity for longs right here. You could actually, I believe there was an even better trade right here. We had a BPR. Price completely respects it. You have low resistance liquidity run right here. Let me just take that off so it's a little bit easier to see. And then you could target some of this internal liquidity. So you have these stacked lows in here. Right beneath it is, we're obviously in that new week opening gap. Plus you have fair value gaps in here on the higher time frame. So I think that would be the best exit from that point of view. We also have right here, like right around 9:30, when you see these wickless, these are imbalances right here. So if you have an open and there's no wick beneath it, like this candle right here, 9:36, even this candle, a lot of the time price is going to want to come back to those areas just because there was no form of selling. It's just straight buying right here. So we're going to come back for those imbalances. That's called a vortex. Don't want to get too deep into it. Just if you have a candle with no wick, then price is probably going to go back to it. So yeah, those were the two opportunities. As you can see, again, like it's a bear market. We're seeing a lot of harsh retracements when we're having these little small rallies. Like that's where really a lot of the opportunity is at. So in terms of the rest of the day here, wasn't too crazy about it. Okay, so going into Wednesday, I was not very interested in trading the AM session. So we had this new day opening gap, which is pretty crazy. It's almost as big as the new week opening gap. Like it's very, very large right here. And let me go on the lower time frame. So remember 1:30 was Jay Powell when he spoke. So right here, I'm going to mark out this fair value gap. We took out some of these highs in here. And then something you're going to notice about this structure, which it's pretty like insane. Look at all of these lows that we have in here. Like that is 100% engineered. That's algorithm right there. You know, we're engineering all of these lows and we're taking out all of this buy side just for us to go trade down to sell side. So just because we trade up higher over here in the AM session, in a lot of cases, if we're trading higher, but we're expecting price to go lower, that's a good thing. We want to see that. And you can see price just starts kind of dropping off right here, and then right around 130, well, right at 130. Again, these are these equal lows. It's quite a bit more that I'll show you guys. But right here at 130, we take out some highs. Price is still respecting that 15-minute. We're just accumulating right here. We have our manipulation right here at 130, and then sure enough, we just drop off right here. In terms of entries, nothing really fit my model right here, so I didn't catch a good trade. I took like a break even like down here. But looking back, there was a pretty decent opportunity, and I'd say it's literally once this candle closed, you have all of these imbalances that got disrespected, and if you just keep your stop loss above that high, go really light size, like that's a pretty valid trade. And let's look at what other targets we had. So we had this low right here. It's Friday's low. And then we had Thursday's low was all the way down here. So this is Friday's low. That's a daily low. So we could have targeted that. But it's just insane how we create all of these scenarios, all these opportunities where we're accumulating in price, we're manipulating, and then right when news hits, right when it's the right time, we come back to those areas. Like that's the algorithm right there, you know? So yeah, pretty good opportunity. A lot of the trades that we should have taken on these days were going to be wide stop losses, and that's something we're going to just have to adjust to based on these conditions. We have a lot more fear, we have a lot more volatility, so we're going to have to lower size and keep our stop losses a lot larger. And then in terms of Thursday, there was not anything crazy, so I'll just go to replay mode just so it's easier to show you guys. So right here, let me see if there's anything on the higher time frame. It's not super clear on like the hourly and the 4 hour, because normally you have like some type of fair value gap delivering, but I'd say this is enough to tell you like price kept coming back to this area and it just was not trading any higher. In terms of actual delivery, we have this fair value gap. You could see price clearly respects it. And then London came up, just failed to trade higher. We're trading inside of that inversion right here. And then we left all of the sell side. My main target was these lows right here because they're nested inside of this discount fair value gap. If you look at the overall range, like this is discount down here. Okay. So if we're going to trade down there, then yeah, we could expect us to trade down there, but for us to continue down even lower, that's a lot to expect from price when we have this larger fair value gap and it's nested with these liquidity lows. So that was my main target. In terms of what actual opportunity there was, let me delete that again. So we had this market structure shift in the form of this long 5-minute candle at 9:30, and then we left that Asia low just perfectly right here, engineered another low, and then sure enough 9:50 macro we return. This fair value gap technically inverted, but I'd say like this isn't a good inversion just because there's not any clear conviction to go long. So just because the model is showing something doesn't mean the bias is correct. But if you look right here, we have this order block. It's also manipulation through this high. So this high should be protected, kind of like this high where it's taking out all of this buy side. This high is going to be protected because of this fair value gap. So once we have that market structure shift, we have that protected high, we could expect some type of short opportunity through here, like this. Main target would be these lows. Again, you could sit there and be like, oh, I'm gonna aim for this low, or there's a lot you could aim for, but it doesn't mean you're gonna get it. So just having those small base hits are really important. If you go on the lower time frame, again, like you have to have a wide stop loss, and that's why I'm really emphasizing like go on the higher time frame, have higher time frame entries, so then you're not stressing about, oh, this fair value gap, that fair value gap. Like just worry about being on the higher time frame, having a large enough stop loss, and then going with the trend, the flow, the bias for the day. The bias for the day is bearish. So during this hour around 10 a.m., our silver bullet time, no, there's not a ton of opportunity in terms of like getting short with a good entry. Like look at how choppy we are. But just following that bias, any model is going to work as long as you're on the right time frame. So the right time frame for this day, this week in general was going to be the 3 to 5 minute chart. That's where you're going to get a lot of opportunity. Sometimes you could go sure with 2 minute, 1 minute, but you might get chopped out. But as long as you're following that bias, then you should be good. I hope you guys enjoyed the video. Make sure to comment down below what other videos you want to see me and Marky make. Make sure you guys are asking questions in the Discord or even in the YouTube, and me and Marky will try our best to answer those questions and keep you guys updated. I hope you guys have a good weekend.